And welcome back, everyone, here to Live and Now from Fox. As you're taking a look here, how the markets there ended up for the Dow Jones, down 725 points there in the red. We have not seen a day like that this year at all. So to break it all down for us about why we saw this and maybe what we can all do as investors as well, we bring in David Peters, financial advisor, to break it all down for us. David, thanks so much for joining us here on Live Now from Fox. We always appreciate it. And first off, David, so this was a day that we haven't seen this year yet.
Yeah, I mean, what a day it was, wasn't it? I mean, it was a rough day, I think, in the markets. But I think in a lot of ways, I feel like a lot of financial advisors were kind of waiting on this. So I don't know that it was completely unexpected, but man, what a turn in one day.
Yeah, and is it because, David, just last week, the numbers for COVID-19 just really across the spectrum and across the country just weren't looking good as far as cases going back up?
I think that that's definitely a part of it. I don't think that that's all of it, but I certainly think that that's a part of it. You know, markets tend to look forward, and we tend to see investors looking towards the future. And when they see something that reminds them of bad times, I mean, when you see something like a reminder of COVID-19 and kind of all of the bad things that happened during the pandemic, yeah, I mean, investors get worried, and I think that's certainly part of the reason why you saw the downturn today.
And especially for investors and really retail investors, today would be really the worst day to probably maybe sell off some of your positions. I mean, it's so hard to time the market.
Yeah, it's hard to time the market, and that would also be kind of I think another thing that plays into what happened today is that I think we've been running hot for a while. I mean, we've been in a market that has been growing for a while now, and I think a lot of financial advisors, when you see the market kind of being up kind of every day, you start to get to the point where you sort of wonder when that correction is going to happen. The academic-y term that we hear used a lot is regression to the mean, and basically all that means is that, you know, if we're kind of up too high, we go back to average. If we're kind of too low, we go back to average over long periods of time. And I think that that's kind of part of what you saw today as well.
And just looking forward, not only for the next week, but obviously in Congress right now, they are looking. President Biden wants to look at an infrastructure bill that he hopes to get on his desk. Where would that put as far as the country would be spending more money? Where does that put investors and the way they look at the stock market as well when they see trillion-dollar bills come to the president's desk?
Yeah, I think that infrastructure is interesting. You know, typically the reason why people want to invest in infrastructure is for yield or income. I mean, that's really the reason why they typically want to invest in infrastructure. And certainly, you can see why that might be. You have Biden's bill that that is kind of on the horizon. But I always caution my clients, and I would caution other investors as well. Infrastructure is not necessarily something that needs to go in every single portfolio. As an inflation hedge, I mean, typically that's the term that you hear thrown around when it comes to investing in infrastructure. But, typically when we hear that term, inflation hedge, that typically means CPI linked revenues. I mean, that's typically what that means. And only some things that would necessarily fall under infrastructure necessarily have CPI linked revenues. And so I'm always a little bit cautious when clients want to come in and they want to invest, a bunch of money in any particular area. I truly do think, especially now when you see a big turn in the markets, that it's important to stick to your financial plan. I mean, stick to the plan that's been laid out, especially if it's for long-term investing. Like retirement or something like that, because that's really the key, is that you have to stay the course. I mean, there's going to be dips in the market, all the time, and so we're going to see dips in the market like this. We're going to see them in the future too.
And the good thing, at least, then it goes the other way too. I mean, we see days where it's been up 500, 600 points there as well. So it does go that nice. They're up and down. But our last question here, David. A lot of people have been asking this one, where are there some investors that are worried that the market right now might be just propped up because we're still getting people to have these stimulus checks? You're seeing these tax credits go out there as well. What's going to happen when all of that ends? And also about on the real estate side as well, what's going to happen when these people actually do have to start making their rent payments and mortgage payments again? Is that going to have a little bit of a fallout and then a trickle down effect?
I think it's very possible. I think that, that you really hit the nail on the head. And that's really what I think me and a lot of other financial advisors are really trying to figure out right now, is that when do you sort of see that other side? When does that happen? And I do think that that could have a negative effect on the markets. That's entirely possible. You wonder about when does the other shoe drop? And I think that is really where all of us are right now, is when you see there's, I guess, sort of this natural skepticism with a lot of financial advisors. If things are kind of going too good, if things are kind of up too high, you say this can't possibly be this good. And and so I think that's certainly that's really the question on everybody's mind. To your point, though, it does work the other way too. I mean, it's not all doom and gloom. Again, the idea of regression to the mean is certainly something that, especially with long-term investing, that's a concept that over long periods of time generally holds.
Well, there we go. David Peters, thank you so much for your analysis as well as insight on this day here. And we'll be talking soon as well. Thank you so much, David. We appreciate it.
Thank you. Thank you for having me.
Yeah, no problem. And we continue on right here on Live Now from Fox.